Okay, today was a very, you know, one of those days you get every once in a while. Really not a whole lot to say about it. Trading range day, swing trading, very difficult. If you trade with limit orders, you can make just an incredible amount of money. So, really 60-minute chart, you can see the range. Today, a very small range. Daily chart, we had a second entry short IOI pattern. Inside, outside, inside, inside, but of course, terrible signal bar, and we fell below it late in the day and reversed up, so no surprise, traders bought it. Weekly chart, really too early to tell right now. Bulls won't follow through from last week. The Bears want, at least at a minimum, they want a close at the open door, and they really want a bear bar closing when it's low, and for it to have a big body. Coming into today, we opened big bull bar closing when it's high. However, we have an obvious target below the low of the day, the low of yesterday. So, maybe 20% chance this is the low of the day. If bar two would have closed on its high up here, probably 30-ish, maybe 40% chance of the low of the day being set. However, bar two closed on its low. I think a lot of swing bulls will get out. However, still always long unless we fall below here. At this point, 3 bars in, sideways, big reversals. We went down, reversed up, reversed down, trading range price action. Stop entry is very dangerous. So here, probably always in short, but very dangerous. Probably buyers below here. And even if we get below the low of the day, we'll probably find buyers. So dangerous to be shorting. And no surprise, this was interesting, this bar right here. This happens a lot. You have an obvious target. I'm gonna make it blue. That's normally what I do for, and prior days lows, prior lows. So yesterday's low is 52.75. This low is 53.25. So you have a stop entry by 2 ticks above obvious support, and the reason for that is you have a lot of bulls who will buy a few ticks above this low and put their stop 1 tick below. So risk about 1 point to make 5 or 10 points. That tells you it's low probability. And it's really not a great short. Again, 3 bars down. It's a 4-bar micro channel, so 3-bar micro channel, probably sellers above and at least a small leg down. I would not be shorting down here. And of course, no surprise, then you get this bar. Sorry about that. 9-10 probably always in long. 9-15 had a chance to get a strong close and it failed. At this point, you really have to expect one in the trading range, and being too hopeful is going to get you killed on a day like today if you're swing trading. Swing traders will be much quicker to exit than they normally are because on trading range day, they don't want to give up profit and they don't want to let it come against you too much. At this point, we have a wedge moving average. We have fair trend, 3 push, so fair trend, first push, second push, third. Bulls will exit below or exit on this close, but if they do, they'll probably buy again above this bar. And then again, you get a more clear wedge, 1, 2, 3, 1, 2, 3, 1, 2, 3. I think bulls get out, aggressive short, but an okay short. Maybe bears sell above this bar. Strong breakout, but again, the closing right at the low of the day. Could not, we fell 1 tick below the day, big tail on bottom, so trading range day, probably buyers down here. Bar 2 is a warning that, we're hovering right above yesterday's low. Probably sellers above, but I think a lot of always in bulls would get out. Always in bears would get out above. Always in bears definitely get out above this bar. They may have gotten out above this at the trigger, so reasonable swing buy. I definitely get out. Low too short at the moving average, so it's a wedge bear flag, and the bears want they want a top measure move down. It's a tricky short because it's a low probability short. You're betting on a bear breakout and a measured move down. However, you have a low one, low two. A lot of always in bears get out here. So will they short again? Probably, if you sell below and put your stop above this bar, you're probably going to lose. That's just the nature of the game. However, it's an okay short. You know, the reward going for a minimum of 2 times your risk. So, once you get this, probably best to get out. And you see, at this point, I think always the bears get out. Aggressive bulls go long. But problem again, bear, here's a bear leg, probably a second leg down. Here's a wedge, so we have a wedge bear flag. We may test down, so I think always in bears, always in bulls will get out. If they don't get out, maybe they get out on this close. Then we test it down. Sorry about that. If a bull does hold, I don't think they get out below here. I think they use a wide stop, and that's what happened here. A lot of bulls bought this low. So now we have a wedge, 3 pushes, 1, 2, 3. We may test up to the high today. Probably always the long this bar, but we may get a little more down. So it's aggressive buy. Now we have an inside bar, so an IOI, second entry buy. I think bulls can buy above this bar, but they need to stop at a minimum down here. So breakout pullback buy. But again, bad signal bars, but we're at the low of the day. Low bottom of the trading range. Okay buy. We did the minimum goal. We fell below, we went below yesterday's low. So always in long, testing this high. Arguably wedge bottom 3 pushes, so this may be this isn't, we're probably gonna get 2 legs up. This is probably not just 2 legs. We're probably gonna get a deeper pullback and then a third, and then a better looking second leg. So maybe this is the pullback. So here we have a wedge. Always in bulls probably get out here. Sorry, I keep yawning. But I think they got to buy again above here. And what do they do with this? I don't know. Uh, it's tricky. You get out, but if you do, you get back in, and then make it a little bit at the end of the day. So tricky day. I mean, it's a limit order day. Bulls will buy every bear breakout. Bears will sell every bull breakout. So traders will sell above this bar, scale in, get out. They'll sell this high. They'll sell this high. Buy this low. Buy this low. Buy this low. Buy this close. They'll sell up here. Buy down here. And they'll even buy up here. Ran out of time, but probably made money at the end of the day. So really not a lot to say on a day like today. I'm going to go and open it up to questions and just kind of share a few more things. But yeah, really not a whole lot for a day like today. So I'm going to go ahead and give just a few minutes on questions. All right. Looks like that's there's no questions today, so oh, 1 second. Spoke too soon. Right, question. Are you scalping or just trying to trade always in? And what made you decide to concentrate on one versus the other? If you were just trying to stick in, if, okay, so am I scalping or just trading always in? And what made me decide to concentrate on one versus the other? If you are just trying to stick to trading out or always in? Well, I've done both. I started out trying more to scalp, and because I joined Algernon probably like 2 years ago, and I noticed him all the time taking trades such as instead of buying above this bar, he would buy the low of this bar, or buy this low, or sell up here and scale in. And a good example is you get these bars, so he'll sell a close scalp out, and then right here he would sell, this high and scalp out, or you know, buy this low, buy more lower. And I just realized over time, the issue with scalping is to do it really effectively, you really need to be able to trade small. And Al recommends if a trader has the ability to trade 4 contracts, risking say 3 points on each contract, then or 4 points per contract, that person's much better off with scalping because they can trade, one contract and still, so what's an example of that? So we had one the other day. Uh, give me 1 second, I'll be able to find it. I think maybe it was over here. No. Yeah, it's right here. So I'll give the example of, what if a trader sells this high? Well, if I can only scale in 1 point higher, so if I sell 850 and I sell this high and then I sell 1 point higher, stop up here, I'm probably going to lose, right? Well, if I can trade a total of 4 contracts, I could sell this high, sell 1 point higher, and then instead of putting my stop up here, I could sell two up here, but my final stop up here. If you do that, break even's right here. I know that because I calculated it the other day. I'm not going to do that right now. To keep it simple, uh, I was, you know, I was doing okay scalping, but on days like I always missed these kind of moves. I began to notice with always in, if you sell here, get out, maybe you get back in short here, get out down here, you make like 15 or 16 points, and I wasn't I wasn't making near to that scalping. Um, and with always in, I've just realized you can trade, 1 or 2 contracts, and once you get a better understanding of it, you can do pretty well. Honestly, if you can manage on a day like today to just not lose a lot, even if you lose 2 or 3 points, or worst case 4 points, that's okay. If you do today right, realistically, honestly, you're not gonna make 5 points trading always in. You might, but maybe if you avoid losses in here and you buy up here and you get out up here, it's hard to do. But if you can just not get absolutely crushed on a day like today, and when you have these kind of days, you'll do very well. You can make 10, 15 points on this day. You make a lot of points on this day. You know, so that's mainly why I decided to trade always in. It's just I was missing, you know, I was missing these days. for instance, always, scalping on a day like today, sure, it's doable, but, you know, it's just, I enjoy swing trading. You buy above this bar, you buy this close, maybe you get out on this close or this close, and then, you know, you short, and you get out of a long, maybe you get out of your short up here, you go long maybe here, and you just hold, and you just hold up to here. You make like 10 points. So for me, it was just easiest to, it was easier for me to accumulate more points, and it just made my math better. With that being said, uh, I will scalp sometimes, but primarily my primary goal is to really just trade always in and really just focus on just doing that. Because if I can just manage to do one thing, it's a simple, a day like today, it's a great example, maybe you short below, but if you do, you get out up here, you go long, and it just hold for the whole day. And if you do it right, you make, 15 points. So I hope that answers your question. Again, it's preference. I highly advise if someone's struggling or they're not making the points they want, highly recommend swing trading and always in, because Al started out trading always in. And really, if you think about it, the trades he takes, a lot of it stems from always in trading. I know it's hard to fully believe, but a lot of it, for instance, he might sell this close, or maybe he sells this high. But then again, if he sells this high, he probably wouldn't do that. But at this point, a lot of always in bears are going to get out, always in bulls are going to buy. He might buy this close and buy 1 point lower for a scalp. Well, that's because it's always in long. He'll buy this low and maybe buy 1 point lower and scalp out. Why? Because always in bulls will not get out here. He'll sell this high knowing that there's probably going to be a pullback, or he'll buy below this low, or buy below this low, or buy this low, knowing that always in bulls are not going to get out there. So I hope that answers your question. And all right, that's it for questions. So hope everyone has a great evening.